Hello everyone, welcome to Day Trader S&P 500. It's Saturday, January 18th, 2025. This is Dale Woodson, editor of Woodson Wave Report and the YouTube channel. As always, we want to get our YouTube subscribers caught up with our newsletter subscribers. So without further ado, I want to show you guys our auto trades. That's the new thing here, okay? And I can get more into that. There's a landing page for Striker on the auto trades, okay? And what that is, I'll just get right into it. Let's go to the NQ, which we did. I'll get down there and explain that while we're here, and then we'll go backwards, okay? There it is, auto trades using triggers and targets and Fibonacci and Elliott waves, okay? These are real trades with real gains and losses and stops, okay? Developers, yours truly. There's the system, which I just said. Money management, we use Ryan Jones, which we limit our losses to 5% of the portfolio. I even make it even tougher, 5% of the cash, okay? Keep our losses low. You open a futures trading account with Striker. They are a futures broker, I am not, and then they auto trade my trades. I give them to them, and they make those same trades in your account. There's the contact information right there, okay? So let's just go right into the NASDAQ E-minis. These are out every week. Published one earlier this morning, and there you see our ES. We have the regular E-minis and the micro E-minis, okay? That's for that auto trade system. Okay, without further ado, here we go. Here's our Fibonacci time spirals. The one we did from last July was near perfect. Minimal slippage on the right, and you can see it nailed that high. The turn date was on a Saturday, and it turned the next closest day it could on Friday with no slippage for that one, which was 144 days, which identified that 12.7 high. From that 12.7 high, we created another Fibonacci time spiral. That one again has a little slippage, and it shows the next one of January 31st. Actually, it's January 30 because I started it on that Saturday, the 7th, and it was actually on the 6th. So we'll look at that for January 30, 31. These are always within plus or minus 2 days, especially on these 55 days. Historically, 55 days from an all-time high marks a low, possible panic crash low, if you will. But we'll see how this one plays out. We got a couple more weeks for that. This one had a low on the 10th, so it could mark 2 consecutive lows. We'll get into that in more detail, see how that plays out, okay? But here we've got, and this is in all of the indexes, we have a 1 down, parentheses, 2 up, which is a 786 retracement. Then we have a 1 down, 2 up, which is a 786 retracement. Then in red and italics, we have a 1 down and a 2 up, which is a 786 retracement. I've been doing this since the 90s. I started the newsletter in 1997, I believe. I don't remember seeing this before. What this portends or portrays would be next would be wave 3 of 3 of 3 down. That would be third wave at 3 degrees of trend, which would be huge. And the 55 days usually marks a low, which is the end of the month. So we will see how that plays out. Now, we always ask ourselves whenever we do a chart or a trade, where is this wrong? Okay, this wave 2 up is wrong when it goes above this wave 2, okay, at the higher degree of trend. And this wave 2 is wrong when it goes above this wave 2 in parentheses, because second waves cannot retrace more than 100% of the first wave. And this wave 2 is wrong when it goes above the all-time high. Okay, so that's what we're looking at there. You can see the downward slope, and you can see lower lows and lower highs. Here's our wave 3 targets at 3 degrees of trend. Don't think I need to read them all to you, but we will see how this plays out. And even if, say, the market goes above this high here, Okay, and we have the numbers on the E-minis. We'll get to that later. But if it goes above here and then goes down, we're still looking at a third of third wave at 2 degrees of trend, which is severe enough. The third of third, I don't remember if I've seen it. It may have happened, but I don't recall. Okay, so we'll see how this plays out. Remember, Monday's a holiday, and then we've got less than 2 weeks into that turn date at the end of January. Okay, and here's, yeah, I don't recall such a feat being achieved. 28 plus years, second wave, all at 786 retracements. Okay, oh yeah, and I wanted to mention too, we're listing the 2.618 and 3.618 multiples because this wave 3 back here at the beginning of the decline, it attained a 3.618 multiple of the first wave. Okay, and if these second waves are going to repeat each other, then it stands to reason that the third waves would repeat each other. So if this 3 right here was a 3.618, then we might expect this 3 with parentheses to achieve a 3.618 and this 3 to achieve a 3.618, or this or this 3. So we want to put those on the table because they're possible, especially with this one. You know, these repeating things. You can see the twos are going to repeat. Second wave's up, then the third wave's down. Stand to reason that they would repeat. So we'll see how it plays out. Okay, a lot going on here. But again, we know where we're wrong and we know where we're right. And where are we right? This 3 down is in play in red italics when this wave 1 low is surpassed to the downside. The same with this wave 3 over here, and this one's already achieved the minimum right there, that 3. Okay, is there anything else we need to show you guys on this? There's the targets there if you didn't see them before. Again, we're listing the 2 and the 3.618. Change in trend, we were looking since last October. We finally excuse me, got the initial confirmation of a change in trend to the downside when all 5 of these were attained, these steps, if you will. Okay, let me see if I can get those in there on one page. There's a 5th one there. So now that we saw that at this degree of trend, which is the smallest, now we need to see them at the larger degree of trend, and you can see the number 1 was achieved, number 2 was achieved, number 3 is in progress, and that's that third of third wave at 2 degrees of trend. Okay, so that's it on the NQs, and pretty much all of them are doing the same. I want to get to that NQ chart to show you guys. We'll make this a big screen. There's the same thing on the chart. You can see the 2, the 2, the 2. Again, a little repeating there, but that's what we're looking at there. Okay, let's go to our ES report, which is for monthly subscribers, and this is what we put out at the market close on Friday. There's our auto trades system. Okay, and there's our Fibonacci time spiral, which we already went over. And here is the E-mini futures. We're looking at an hourly chart. There's the all-time high on our turn date. That's at 12/6 Friday. See, we have a 1 down in parentheses, 2 up, 786. A 1 down, 2 up, 786. A 1 down in the red, 2 up, red in italics. And this went above the 786. Okay, so this is where the ES is diverging a little bit from the NQs or the NASDAQ, but we'll see again if this goes above this high here, which is 60.68 and a quarter, then that too is wrong. Okay, again, if it goes above this 61.07, I told you I had the numbers here for the ES, then that too is wrong. And if it goes above the all-time high at 6178.75, then this too is wrong. So the beauty of Elliott waves is and Fibonacci's is we know exactly where we're wrong to the penny or to the 100th of a point. Where are we right? This 3 down here is in play when this wave 1 in red italics low is eclipsed. Okay, this 3 down here is already in play, and this 3 down is already in play. So we'll see. This 2 needs to stop soon. And again, if it does eclipse this previous high, then we're still looking at a third of third wave at 2 degrees of trend, which is severe enough. Okay, there's our verbiage there. There's our third wave, a second wave, 786 retraces. I think this is pretty much verbiage. And there's our targets. There's our targets. Same thing. Okay, so let's get out of that and let's go to the ES chart here. I think that's the daily, that's the hourly, and this is what we are looking at here. Make it bigger. There we go. There's the all-time high on the turn date. By the way, this one's on that near that 110 turn date. Okay, but there you go. There's the make or break. Make or break means where are we wrong for that wave 2. There's a make or break for that wave 2. There's a make or break for that wave 2. Okay, so we got down, down, down. There's our targets. There's what has been achieved. I think it's better, excuse me, served on the other chart. But we'll get back into that. Let me get into, if I can, let's look at, I hope I got this ready here, the US10yr. Let's change this from let's change this from hourly to daily. Get a back out, get a bigger view. Haven't looked at it in a while. Let's see what we're looking at. Okay, and let's get that here. There we go. Okay, let me broaden that out a little bit. Okay, from this wave 2 low, we have a 1 up in parentheses right there at 4.505, a 2 down, okay, at 4.126, 3 equals 1 at 5.032, and you can see it's developing there. Near term little pullback, but this should be 5 waves up. That's where 3 equals 1. That is the initial target, if you will. And the 1.618 is up here at 5.592. Okay, so we got a 5.032. That's our initial target right there. That's what we're looking at. Where is this wrong? If it goes below this wave 2 low, which is 4.126. Okay, so that's what we're looking at. We know, and we got confirmation that wave 3 in parentheses is in play with the move above the wave 1 in parentheses high. So that's what we're looking at. That's where we're wrong. That's where we're looking at being confirmed correct when 3 equals 1 or higher, which is up there. Okay, let's put that away, and let's see. We haven't looked at gold in a while. Let's see what gold looks like. Okay, let's make that a bigger chart, and we can just look at the most recent move up here. Okay, this is a daily chart of gold. That was a wave 2 low. That was a wave 1 high back here. Excuse me, in May of 23. And here's a wave 2 low, and then we've got 5 waves up for wave 3. There's our wave 4 targets. Haven't achieved any of them yet, but fourth waves are long and sideways by nature, so we might expect a long sideways chop with a bunch of overlap up and down, as you can see is starting here. So that's what we're looking for. There's our wave 4 targets, and you can see all of this accumulation right there. So that would be between the 382 and the 500. That would be a nice landing place for this wave 4. And the fourth wave sideways to down pattern should yield to wave 5 up to new all-time highs above the wave 3 high of 2790.07. Okay, so I think that may do it. Let's do one more thing. Let's do this NQ because I really like how this this chart shows exactly what's going on right there. Okay, again, I'm amazed at this, but the math is the math. You can't change it. The math shows 3 of 3 of 3 to the downside on deck, and we know exactly where it's wrong at 3 degrees of trend. So we'll see how it plays out. Until next time, take care, everyone.